All right, let's begin to the show and on to the latest offering from ICICI Prudential Mutual Fund, ICICI Prudential Transportation and Logistic Fund, an open-ended equity scheme that will help you invest in transportation logistic theme as yield the benefits of revenge traveling and shopping. The NFO will close today. To discuss about the fund in detail, we have Harish Bihani, Senior Fund Manager, ICICI Prudential Mutual Fund. Harish, good evening and welcome to the show. And I believe today is the day when the NFO is closing, is the last day. But then let's talk about this sector in particular, because it includes OEMs, auto original equipment manufacturers, auto components and logistics. Now, this theme ideally incorporates as many as 22 sectors. So, what are we actually talking about when it comes to this fund?
Right. Thanks, Kavita. What we are looking at in this particular sector, as you rightly pointed out, is a entire theme on auto car makers, two-wheeler makers, three-wheeler makers, commercial vehicle makers. Then you have this entire auto ancillary play, which is all the component which an auto company would require that would be supplied by these auto companies. And then lastly, we have logistics is again a fairly big sector where you have the road logistics, ports, rail logistics, you have e-commerce operators. So whole gamut of companies, whole gamut of themes in this particular fund is what we are looking at when we have envisaged this particular fund.
Also, Harish, because we are talking about a sector-specific fund over here for an investor to help them understand as to why they should be going in a particular sector fund and having this kind of a theme in their portfolio. How would you analyze the growth outlook or the growth prospect of this sector, and why should one actually look into diversifying themselves into this particular sector with this particular fund?
Sure. So I'll give a bit longish answer on this. We'll reflect back on what has happened in the past and think about what could happen in the future. When you think about the past 10 years and look at the volume for the passenger vehicle industry or for the two-wheeler industry, it's been largely flattish for the last 10 years. And when you think about the last 6 to 7 years in that context, there were a lot of macro challenges, macro headwinds, which led to these impacts. For example, we had this GST implementation, which led to an impact on income on certain sections of the society, followed by IL&FS crisis, which had financing impact on certain companies, followed by demonetization, followed by COVID crisis, followed by now Russia-Ukraine crisis. So these were some of the macro challenges which came up in the last 6 to 7 years. Then look at some of the micro challenges in this particular industry. You had a lot of regulation changes. You had BS4 to BS6. You had the axle load norm changes, safety norm changes, insurance cost increase. So a lot of headwinds on the cost side or on the income side for the participants, which led to this entire delay in the demand for auto and auto ancillary companies. Now, what is happening today is that we have come to a time frame where replacement cycle has been delayed for very, very long. And we think that we are at a point where the entire replacement cycle will start inching up from here on. That's one. Secondly, we look at the new model cycle. When you look at all the players in terms of the new model cycle, there are good launches which are happening as we speak, and there's a good model cycle over the next 2 to 3 years, which creates its own demand, right? So a combination of this entire pent-up led replacement demand, this entire new model cycle has started reflecting in the volume growth as we speak, and that should start trickling in. And in that context, whenever you invest in any fund, any sector, you should think about where are we in the business cycle and where are we in the profit cycle. When you look at the business cycle, as I pointed out, that the last 10 years, there have been hardly any earning growth. There have been hardly been any volume growth. So we are at the lowest point in the business cycle. We are seeing some improvement now. In terms of the profit cycle too, because of commodity price headwinds, there was an impact. Again, we are at the bottom or close to bottom of the profit cycle. So both from a business cycle and the profit cycle perspective, things should start improving from here on. And as when cycle starts, it typically kind of stays for the next 3 to 5 years, which is what we are suggesting that any investor who has a time frame of 3 to 5 years to look at this particular fund in the context of all that we spoke.
Harish, so the fund outline says that it's going to operate as a flexi cap fund. Can you just help us understand how does the strategy work, and what exactly will be your route in investing in stocks and considering stocks?
Right, sure. So when you look at this fund, there'll be about 50% allocation amongst the large auto car makers, whether it's a car maker, two-wheeler maker, three-wheeler maker, commercial vehicle. There'll be a 25%, which could be ballpark be for the auto component companies plus minus 5%, and similarly logistic company 25% plus minus 5%. And in that we'll be benchmark aware, but we'll be benchmark agnostic in the sense that we'll buy the best companies where we think that they have the right model cycle, right earning growth trajectory over the next 3 to 5 years should be led by model cycle, the overall margin tailwind which is going to be there over the next 5 years. So essentially it'll be a flexi cap approach, will not be tuned to a large cap fund, large cap stock, or a mid cap or a small cap. We can invest in entirely in mid cap or entirely in small cap, presuming that there are enough ideas to invest in, so as to ensure that the final aim is this, that let's look at companies where earning growth will be in double digit over the next 3 to 5 years. And if you can identify those companies across market cap, invest in those. If earning come through, finally market is a slave of earnings and cash flow, and the overall return will follow the earning and cash flow cycle.
Harish, so what exactly in terms of companies are we talking about? Because the underlying theme includes companies with a strong growth prospect, obviously longevity and anti-fragility, and obviously good return on invested capitals over cycles. If we talk about the theme, there are over 100 reliable companies. So for you, in order to pick up a specific company or a stock, what is the outline that you're following?
Sure. So on average, when you look at both the auto sector as well as the logistics sector, on average, the governance of the companies are good to excellent. You look at the cash flow profile of these companies, again, they are good to excellent. So you don't have any concerns on average across cycles for these companies. The challenge has been growth, which has led to subdued performance over the last 5 years. Now, if we can identify companies which are at the point where we've got the model cycle right, we've got the overall changes in terms of the fundamentals, not only on the model cycle, but also on the profit cycle, led by operating leverage, led by commodity price tailwinds, that should ensure that the overall growth rates are decent over the next 3 to 5 years. So our approach will be very, very simple. Look to identify players which can gain market share, which are leaders in their field. They have enough tailwinds in terms of improving their margins and cash flows. The return on capital should be upwards of 20%. And if you can identify enough ideas in a portfolio with such characteristics, on average, things should be fine over the next 3 to 5 years.
Okay, I see overseas international also. So overseas international, how do you actually diversify, and how does this fund has an international touch to it? Could you explain that?
That is an enabling provision. So we have an enabling provision where 20% of the fund could be invested in any other theme beyond the auto and the logistic theme. So we can invest in any other themes, and we can also invest 20% of that even in overseas listed securities. So it's just an enabling provision so far. We do not intend to use this particular provision at this point in time. We have ample ideas in the Indian listed space amongst the theme and even beyond the theme that we have identified as a part of the entire model portfolio construct. So it's an enabling provision at a future date in case we think that there's a great stock which should kind of deliver the return expectation that we have, we'll kind of try and get this in this particular fund.
Right. So since the NFO closes today, would you want to share any details or the amount that's been collected or any targets that you might want to meet?
Sure. So from a fund management perspective, we really do not focus too much on how much are we gathering in terms of this particular NFO. Our mandate is fairly simple, that with whatever amount that we have been able to whatever amount that our team has been able to get in this particular NFO, we should be deploying that in a judicious way over the next 3 to 6 months, so as to ensure that all the investors who are coming in with the right expectations over the next 3 to 5 years, there's a decent experience over the next 3 to 5 years. So that will be our effort, to focus on the process, to focus on the fundamentals of the companies, and with that, on average over time, things should be fine.
Just to help the investors understand their route of investing in this particular fund, will an SIP make sense, or one should go for a lump sum investment, and why?
Again, this is very generic to most funds in general, and this fund in particular too, that if you have longer term time frames of 5 years, lump sum at any point in time makes sense, simply because on average, again, you look at any 5-year rolling period for Indian markets, things have been decent. That said, there are investors who will focus, who, because of behavioral characteristic, will focus also on some of the near-term numbers. So for them, we would recommend that SIP is the right approach.
Thank you so much, Harish, for making time and sharing all the details on this particular fund. Thank you so much.